Hello everyone. Now we are going to discuss the topic verification under the subject auditing. Verification. Verification is a process by which an auditor satisfies himself about the accuracy of the assets and liabilities that is showing in balance sheet by inspection of the documentary evidence available. Verification means proving the truth or confirming of the assets and liabilities appearing in the balance sheet. So, in the process of verification, an auditor during his audit assignment just verify the truth of assets and liabilities appeared in the balance sheet. That whether they are accurate showed in the balance sheet or not. And again, the auditor check the documentary evidence available in support of their appearance. So it is the inspection, it is the examination of balance sheet items, whether they are assets, whether they are liabilities, by their documentary evidence to confirm the assets and liabilities, to confirm the truth of the assets and liabilities. So in conclusion, we can say verification means just find out the truth of assets and liabilities appearing in the balance sheet. According to Spicer and Pegler, verification implies an inquiry into value, ownership and title, existence and possession, and the presence of any charge on the assets. Here, value means on which value the assets or liabilities is shown in balance sheet. Ownership and title, that who is the actual owner of the particular assets and who is liable to pay off the particular liability. Existence and possession, that the assets is actually belong to the business, actually existing in the business premises for the use of business purpose. And presence of any charge, it should be also verified by the auditor regarding the assets, that is there any type of charge on the assets. Charge means the assets is put as a security to raise a loan or fund from a financial institution or banking company. As per the definition of J.R. Watley, the auditor must satisfy himself that assets really existed at the date of the balance sheet and were free from any charge, and that they have been properly valued. So here, in the process of verification, valuation of assets, existence and possession of assets, ownership and title of assets, presence of any charge should be verified at the truth of the assets. CA Institute also recommended regarding the verification. Institute defines verification as it aims at establishing existence, ownership, possession, freedom from encumbrance or freedom from hurdle, proper recording and proper valuation of assets. So, what is verification? Overall, it is the finding truth of assets in the sense of existence, possession, ownership, recording and proper valuation. The main objectives of verifications are correct value, as defines in the definition of Spicer and Pegler and J.R. Watley. We find that the correct valuation is the main motto of the verification of assets and liabilities. That asset side and liability side contains various items of assets and liabilities that should be on a correct value. This is verified under the process of verification by the auditor. Second, to know whether the balance sheet shows a true and fair view of the state of affairs of business. By put an inquiry about the truth of assets and liabilities, an auditor can ensure himself about the true and fair view of the balance sheet of a business concern. Third, to find out the exact ownership, title, and position of the assets which is appeared in the balance sheet is the objective of verification technique. Fourth point, the auditor have to be verified that whether the assets actually existing in the business for business purpose or not. He have to verify that only on paper an assets is existing in the business, then he may note it and forward it to the management and also report in his audit report. Fifth point, to detect fraud and errors, if any, while recording assets in the books of the concern. By the help of verification technique, an auditor can easily find out the frauds and errors regarding any assets at the time of recording in the primary books of accounts. Sixth point, to find out whether there is an adequate internal control regarding acquisition, utilization, and disposal of assets. In the process of verification, auditor find him comfortable to know about the internal control system existing in the business concern that provide the proper system of acquisition of assets, utilization of assets, and disposal of assets. 7. In the process of verification, when auditor verify regarding the valuation of assets, he have to refer the documentary evidence also, and he will be capable to maintain the arithmetic accuracy in the books of account. 8th point, to ensure that the assets have been properly recorded. Under the process of verification, an auditor have to check that whether the acquisition, utilization, and disposal of assets properly recorded or not. So, various objectives fulfilled by the verification technique, whether it is correct valuation, finding true and fair view, ownership, title, position of assets, existence of assets, utilization, acquisition, arithmetical accuracy, and proper recording of the assets. Now we will talk about the techniques of verification. Techniques of verification includes to check the existence of assets in the business. In this point, auditor examine the actual presence, the physical presence of any type of assets in the business itself. It should be exist in the business. It should be utilized by the business for business purpose only. Second, proper disclosure. Techniques of verification is going with the checking of proper disclosure of each and every information regarding the various assets showing in the balance sheet date. Proper disclosure means what was the value of assets, what is the depreciation, and what is the WDV, written down value of the assets after charging the depreciation, and also check the part of assets if sold or if purchased extra in opening balance. Third, ownership. Ownership techniques provide the help to auditor to verify whether the assets is in the name of business or not, that whether the assets is of the business or not. For this, the auditor can check the title paper of the assets. Fourth, possession technique. Possession technique of verification provide the help to the auditor to verify whether the assets is actually situated in the business premises and also used by the business for business purpose only. If he find that asset is only in the paper in business but physically is used by another person and beyond the purpose of business, then he have to mark it in his audit notebook and have to be communicated to the management for prompt action. Fifth point, valuation. Valuation technique. Valuation technique means the assets and liabilities which are shown by the balance sheet have to be shown on their correct valuation without any increase, without any decrease. Next is correct valuation. Correct valuation means after charging depreciation, after less the amount of the particular part of asset that has been sold, after adding the part of the particular asset that has been purchased during the current year. Seventh point, purchase by proper authority. In this technique, the auditor have to examine that if any part or another assets has been purchased during the year, then it should be proper authorized. Without proper authority, without proper permission of the signaturing authority of the business concern, no assets should be purchased. Eighth point, business motive. This technique imparts the auditor to find that whether the assets is used for business purpose or not. If the management or any staff employee use the assets of business for their personal purpose, then it should be noted by the auditor, communicated to the management for the prompt action. And also it is required by the auditor that this important thing, that this important observation, he have to be included in his audit report. Checking of charge. Sometimes it has been seen that business put their assets on mortgage as a security to the banking institution, to the financial institution to raise the loans, to raise the funds for business purpose. If this situation is exist in a business concern, then this is the liability of auditor that he have to check. This situation means he have to check whether a charge is occurred on any of the assets or no. So these are the techniques that used by the auditor for verification purpose. Now why auditor do the verification? Because there are various advantages of verification technique for audit purpose. Some of them is, first, it avoids manipulation. With the help of an auditor, find exact valuation, identify the charge on assets, find the actual use, find the amount of depreciation, find the existence, find the possession of the assets in the business. So after verification of these points, auditor can satisfy himself that manipulation is not existing in the accounts of the business concern regarding the assets. Second, verification technique of auditing used by an auditor for the verification of assets provides safeguarding to the assets. Safeguarding the assets means the assets should be used for the business purpose only, not for the personal purpose by the management or by the any employee of the company or business concern. Third, verification ensures proper recording, proper evaluation, proper use, and identification of charge on assets. So, with the help of verification, an auditor identified that assets or liabilities shown in the balance sheet are on their proper value. It shows true and fair view of the state of affairs of the company. After the verification, when auditor finds that what is the correct value of the assets or liabilities, existence, possession, title, identification of charge, proper or improper use, and on the basis of these identification, if find okay, then an auditor can sum up their report that the financial statement or books of accounts of a business concern are showing true and fair view. So, on the basis of these advances, it is necessary to use by the auditor verification technique for the assets and liabilities. Now, what is the exact duty of auditor regarding verification? Let's be talk. The auditor of a business is required to report in concrete terms that the balance sheet showing it true and fair view or not. We can say he has to examine and ascertain the correctness of the money value of assets and liabilities appearing in the balance sheet, and this examination is known as verification of assets and liabilities. To find out true and fair view of the state of affairs of a business concern on the basis of balance sheet, an auditor is required to go through with the verification technique to examine the each assets and each liabilities that is showing by the balance sheet. For verification purpose, the auditor can use various techniques to find exact results. But at the time of verification, it is expected from the auditor that he has to keep in mind some points that should be emphasized by him at the time of verification. The first is ensuring the existence of assets. Second, acquiring the assets for business. Third, legal ownership and possession of the assets. Ensuring that proper valuation of assets. Fifth is ensuring that the assets are free from any charge. Actually, in conclusion, we can say that verification is to put inquiry by the auditor regarding the existence of assets, acquiring the assets for business purpose, legal ownership and actual possession of the assets by client business, proper valuation of assets in the balance sheet, and to find out the charge on assets, if any, existing on any of the assets of business. Here the relation or duty of auditor concerning to verification is that he have to take very keen view at the time of verification of assets and liabilities showing by the balance sheet. In the first point, he have to ensure himself that assets is actually exist in the business. In the second point, the auditor have to ensure during the verification that the assets is acquired, assets is purchased for the business purpose only. None of the employee, none of the member of management is using the assets or acquiring the assets by their personal use in the name of business. If the assets is purchased in the name of business, then it should be exist in the business premises only. Legal ownership and possession. It is expected from the auditor that after the verification, he have to ensure that the assets existing in the business is in actually ownership of the business. If the assets is acquired on the loan or lease, then lease deed or loan deed should be there, and it should be in the premises of business for the business purpose only. Next 4 point, proper valuation. Auditor have to ensure after the verification that assets shown in the balance sheet is on its proper valuation. Proper valuation means correct valuation, without any unnecessary increase, without any unnecessary decrease, and the depreciation amount should be adjusted if any there. Next is ensuring the assets are free from any charge. Sometimes it has been seen that business concern put their assets as security for raising the fund or raising the loan for business purpose. So if there is any condition that business put their assets as security or on mortgage to raise the loan, to raise the fund for business purpose, this situation is called the charge on assets. So after verifying the assets, the auditor is expected to find out the charge on assets if any there. Now we talk about the specific consideration by an auditor while verification. As we discussed earlier, that verification is all about ownership, title, possession, existence, proper use, safeguarding the assets, and free from any charge. So all these points have to be taken by the auditor at the time of verification. He have to ensure about the existence of assets. He have to ensure about the acquiring of assets only for business purpose. He have to ensure himself about the legal ownership and possession of the assets. He have to ensure about the proper valuation that is shown in the balance sheet regarding the assets, and he has ensured himself about the charge on assets, that all the assets are free from charge, or is there any assets that having a charge on it. Now we talk about the valuation. What is valuation? As we discussed in the verification, as a element valuation, it is a part of verification process. Now we discuss it separately. Valuation. Valuation means finding out correct value of the assets on a particular date, that is balance sheet date. It is an action of calculating the value of assets and critical examination of these values on the basis of generally accepted accounting principles. Valuation of assets is to be made by the authorized officer, and the duty of auditor is to see whether they have been properly valued or not. For ensuring the proper valuation, auditor should obtain the certificate of professionals, approved values and other competent persons. Valuation is the primary duty of company officials. Let me clear, very much clear, that valuation is the primary duty of company officials. Auditor is concerning only to check the valuation whether it is correct or not. Auditor can rely upon the valuation concerned officer, but it must be clearly stated in the report, because an auditor is not a technical person. Without valuation, verification of asset is not possible. So in each and every case, it is expected from an auditor that he have to go with the technique of verification under his audit work. Assets and liabilities are the prominent items shown by the balance sheet. So, for its identification, for its verification process have to be used by the auditor. If the valuation of assets is not correct, both the financial statement such as balance sheet and profit and loss account cannot be correct. So, the auditor must take utmost care in the process of verification to show true and fair view of the state of affairs of the financial position of the business. So here, what is valuation? Valuation is all about to find the correct valuation of assets or liabilities that is showing by the balance sheet. Who will be responsible to verification? The auditor. Actually, he is not a valuer. He is not concerning about to do the valuation, but if he thinks so, then he can get the expert advice regarding the valuation of an assets or liabilities. So, the auditor is concerning to the valuation in form of only auditor, means he have to check whether it is correct or not. He is not liable to do the actual valuation. Definition of valuation. In the words of J.R. Bartley Boyle, a company's balance sheet is not drawn for the purpose of showing what the capital would be worth if the assets were realized and liabilities paid off, but to show how the capital stands invested. Means the capital invested by the owner of the business or by the management of the business in which type of assets, fixed, current, etc. In the words of Joseph Lancaster, the valuation of a assets is therefore an attempt at equitable distribution of the original outlay on the period of the assets useful lives. The conclusion of both the definition is to verify the exactness of the assets, to verify the truth of the assets. So here, what is valuation? Valuation is finding the correct value of the assets on a particular balance sheet date. Now, with the help of meaning and with the help of definition, we can identify the main objective of valuation. The first is assessment of correct financial position of the concern. With the help of correct valuation of the assets, an auditor can find the correct financial position of the business. Second, to inquire about the mode of investment of the capital of the concern. The objective of valuation is how much capital, how much fund is invested by the owner or management towards the assets. Third, to assess the goodwill of the concern. On the basis of valuation, if a business is in the condition to sell itself, then valuation technique provide the exact valuation of business. Fourth, to evaluate the differences in the value of the assets as on the date of purchase as on the date of balance sheet. All the assets are in the nature of having depreciation due to lapse of time, due to use of the assets. And valuation provide the difference, exact difference between the purchase value and the exact value on the balance sheet of the assets. So these are the objectives for which valuation technique is used. Financial position finding, assess the goodwill, to check the investment, to check the difference between purchase value and the balance sheet date value of assets. How can an auditor go with the valuation, or in what type of valuation can be done? So let me talk about the methods of valuation. There are 6 methods. First is cost price. Second is market value method. Third is standard cost method. Fourth is book value. Sixth is token value. And the last 6, scrap value. So these are the methods for the valuation of assets. Assets can be valued on the cost price method. Cost price means how much cost has been incurred to acquire the assets. Market value method, in the industry, in the market, what sale price may be recovered if the assets is sold off. The value which will be reliable is called as the market value of the assets. Standard cost method. Standard cost method assumes that the particular situation will provide the particular valuation of the assets. So this is the standard cost method. Book value method. Book value method means on what value the assets is shown in the books of accounts. It may be historical value, it may be value after depreciation, it may be gross value. Generally we use the book value as purchase value less depreciation till date, and the balance is taken as book value. And auditor have to verify all these steps: purchase value, depreciation charged, and value after depreciation. From the point of view auditing, method of value is not so important because auditor is not a valuer. His liability is restricted up to the checking of correctness of the valuation of the assets. These are the methods on which valuation can be done. The primary duty of valuation is of management. In scrap value, we can say that the value after the use of assets, when we sold it as scrap, then whatever be realizable value is called as scrap value. Suppose a machinery is purchased for ₹50,000, its life is 10,000 and its life is 10 years, And after the 10 years, this 50,000 cost machine will be sold on for rupees 4,000. Then 4,000 is scrapped. So there are various methods for the valuation of assets. Now we have to talk about the auditor's duty as regard valuation. In essence, we can say that auditor is not a valuer. He have to concern only about the checking of correctness of value of the assets. How? In a legal case against Kingston Cotton Mills Company, it was held that although it is not part of an auditor's duty to value the assets and liabilities, yet he must exercise reasonable skill and care in analyzing the basis of valuation. He should test the accuracy of the value put by the officers of the business. In any case, the auditor cannot guarantee the accuracy of the valuation. It means auditor is not a valuer. He is not liable to do the actual valuation of the assets, but it is expected from an auditor that method of valuation has been known to him. He have to inquire that proper valuation method have to be used for the valuation of the asset that is shown in the balance sheet. In any case, after auditing, after checking the valuation, auditor cannot go with any guarantee or any accuracy of the valuation. The prime facie duty, prime facie liability of the valuation is of management, and at the time of auditing, the management have to serve a certificate of valuation towards the auditor that all the assets has been valued properly and shown its original value in the balance sheet. It is known an auditor's duty to determine the value of various assets. It has been judicially held that he is not a valuer or a technical man to estimate the value of an asset, but he is definitely related with values set against the assets. He has to certify that the profit and loss account shows the true profit or loss for the year, and balance sheet shows a true and fair view of the state of affairs of the company at the close of the year. Therefore, he should take reasonable care and skill, analyze all the figures critically, put inquiry into the basis of valuation from the technical expert, and satisfy himself that the different classes of assets have been valued in accordance with the generally accepted assumptions and accounting principles. If the market value of the assets are available, that is, in the case of share investment, then he should verify the market value with the stock exchange quotations. If there is any change in the mode of the valuation of an assets, he should seek proper explanation for it. If he is satisfied with the method of valuation of the assets, he is free from his liability. So after the discussion of various points, it can be concluded that the first priority of valuation is from the side of management. Auditor can accept the management valuation, or he can seek the expert advice. After seeking the expert advice, if he is not satisfied from the expert advice, he can deny it, but on the basis of proper logic. Being auditor is not a valuer, he cannot guarantee any type of valuation of assets. He cannot guarantee the accuracy of the valuation. But being an auditor, it is expected from the auditor that he have to go with the proper care, proper due care, to check the method of valuation, because on the basis of valuation he have to conclude his report that profit and loss account and balance sheet are showing the actual position of the business. So, if he is satisfied with the method of valuation of the assets, then he is free from his liability. So, auditor's duty regarding the valuation is to check the base of valuation, not the guarantee of any type providing towards the valuation of assets. Importance of verification and valuation. Now we are talking about both verification and valuation. Yes, importance of verification and valuation of assets. If we combine together verification and valuation, then we find that the common point generated by the student as importance of verification and valuation. Like we talk about this. The first is showing the actual financial position after valuation or after the verification. This is the objective of auditor, to find out the actual financial position or comment as true and fair. Second is knowing the real position of profit and loss. If correct valuation is there, then with the help of verification, auditor can identify the real position of profit and loss. Means how much loss is suffered by the business or profit earned by the business concern. Increase goodwill. Proper accounting, proper verified books of accounts can increase goodwill of the business concern. Assure shareholders. If a business having goodwill, a real position in the sense of profit and loss account, and actual position in its financial statements, then shareholders may attract to invest in that particular business. Easy for sale. After the verification, it may be concluded that if all things are correct, that business is showing true and fair view and the valuation is this. So in case of situation, if a business have to be sold, then the situation for selling the business find easy. Next, easy to get loan. Verification provide that the business is showing its actual position in terms of balance sheet, in terms of profit and loss account. So audited account required by the banking company or financial institution or loan giver company, then on the basis of verified books of accounts, to get the loan will find easy by the business concern. Easy to get compensation in case of any insurance claim. Insurance company only accepted the audited books of accounts, and audited books of accounts means the auditor has been done the verification with regard to assets and liabilities. So verified assets and liabilities will make easy to get compensation from the insurance company. So these are the common or conclusive point that make the importance of verification and valuation combined. Now let me talk about the difference between vouching and verification. Vouching and verification. Difference of verification and valuation is based on the meaning, evidence, checking, view, verb, personal, and time. Let me discuss one by one. First is meaning. Verification is finding truth regarding the assets in terms of existence, ownership, acquisition, possession, charge, and valuation, etc. In case of valuation, in valuation, auditor provides or find out the correctness of the value of assets and liability, that whether they are correctly shown in the balance sheet or not. Verification includes valuation. Verification is a wide term which includes valuation, but valuation is a narrow term which is restricted only about the correctness of value of assets and liabilities shown in the balance sheet. Verification required evidences in form of title for ownership. Receipt for payment constitute documentary evidence for verification. Means title deed, lease deed, bills of purchase. These type of evidences required by the auditor while he is doing verification. Now, in case of valuation, the certificate offered by the owner or director or expert is the documentary evidence for valuation. The certificate offered by the owner. The prime facie duty regarding the correct valuation of the assets and liabilities shown in the balance sheet is of management. Management includes general manager, director, or any authorized person. If the auditor is not satisfied with the certificate offered by the management, then he can go for the expert advice. Again, if the auditor is not satisfied with the professional or expert advice, then he can use his own expertise and experience for the valuation purpose. Third is checking. The auditor is required to verify whether the value ascertained is fair or not. In case of verification, auditor verified that the values are actually contributed towards the true and fair view or not. In case of valuation, critical examination of the value of assets and comparative analysis of different assets. To identify correctness of valuation of assets, critical examination are used by the auditor, like comparative analysis between the various assets. In case of verification, the auditor is required to verify whether the value ascertained is fair or not. Next base is view. Verification includes, apart from valuation, the examination of ownership right, the existence of the assets in the business and its fairness from the short of charge. In case of verification, freeness of assets from any charge will also be viewed. In case of valuation, testing the exact value of an assets on the basis of its utility. The range of valuation, the area of valuation is narrow because it is restricted to the exact valuation checking. But in case of verification, valuation is done, but extra some points is also there to verify by the auditor, as existence, possession, charge, acquiring of assets, etc. So verification have a wide range in comparison to valuation. Next point is work. Verification is a final work. Valuation is the initial work and it need to be verified subsequently. Again, the statement is used that verification have wide range and a final work. After the verification, there is no work is required by the auditor. But in case of valuation, valuation is provided by the management itself or expert advice. But by the auditor, valuation provided by the or offered by the management and provided by the expert should be verified by the auditor. So in case of valuation, the next step is verification, but in case of verification, there is no next step. This is final work. Personnel means employee, human resource. Verification is the work of auditor. Actually, verification is some technical work and done by the auditor himself to find out the exact result. Where valuation is the work related to authority or board. Authority or board means client company. As we discussed earlier in second point, the evidence, where we discussed that valuation is offered by the owner or directors, or it may be said that the prime facie duty of valuation is of the company. It is also may be taken as the expert advice, but in case of verification, no second option. Auditor will do the verification. In case of valuation, auditor is not a valuer, but he have to check the valuation whether it is correct or no. Last point is time. Verification is made at the end of the year. Valuation is made throughout the year. This is the verification, which is only can be performed at the closing of financial year, at the end of the year. But in case of valuation, it is made throughout the year. Preparation before commencement of an audit is very necessary for the better performance audit that is based on the audit plan. And the audit plan is always a combination of various audit programs and provides various advantages to the business concern and auditor itself. Auditor maintains audit file with some permanent and current contents that give advantage in the future as ready reference. Auditor staff maintain notebook and noted the observations during the audit work, and it also provide ready reference and as evidence in the on-level code. Audit working papers that is generated by the auditor himself or acquired by the management. These are the personal property of auditor. He may return to it management or he may retain papers with itself. There are various type of test checking which we have discussed: routine checking, test checking, surprise checking, overall checking, audit in depth, and also the use of audit technique. At the time of voucher, we discussed voucher as an elementary proof of transaction. Elementary means source document, documentary proof of transaction. And there are various types of vouchers: debit voucher, credit voucher, general voucher, and supporting documents. Debit and credit voucher are included under the head of cash voucher, and supporting and general voucher are included under the head of non-cash voucher. Then we discuss vouching. Vouching means just the comparison of bills and entries marked by the accountant in the books of accounts. After that, we discuss the valuation. After that, we discuss verification. We also discuss about the difference between vouching and verification, difference between verification and valuation, and find that in an audit procedure, audit plan, audit program, valuation, verification, tick mark, audit in depth are the important point to do a audit assignment. And audit assignment is taken by an auditor will be completed on the basis of a process. And process should be very systematic, which includes verification, valuation, vouching, test checking, audit in depth, overall checking, routine checking, etc., including the audit tick marks. Audit tick marks have a very important role to differentiate that up to which level an auditor has been done the audit work. Tick may be of various types: specific, arithmetical, symbolical. Different color may be used by the auditor, different time duration, different books of accounts, different clients. The auditor can use different symbols, and the vouching as the pillar or initial starting step of the audit procedure, and the end product is audit report, where he provide that whether the books of accounts prepared by the business is actually showing the true and fair view or not. Okay, for today it's enough. Thank you. In next lecture we will discuss about the verification of various assets and verification of various liabilities, and some discussion may be there regarding the vouching also. Okay, thank you everyone.